Secret number 1, the power of habits. You can't go back and change the beginning, but you can start where you are and change the ending. C.S. Lewis. Creating a good habit and getting rid of your bad one is the beginning of a better investing lifestyle. For example, if you create a checklist before you buy any stock is one helpful habit for your investment career. Remember, even the best pilot requires a checklist before the plane takes off. Therefore, we should create a good habit of following our checklist before we put money in the stock market. Another good habit to have is to watch your spending in order to be a good investor. As Benjamin Franklin once said, live below your mean. Only invest what you are willing to lose. Following these habits helps us to become less emotional in the market and become more rational for the long-term perspective as a true investor would. Secret number 2, value investing. There are many ways we can be value investors, but here are the 6 ways that are helpful. 1. Will the company be here 10 years from now? 2. Is this company even generating money? 3. Is the company easy to understand? 4. Is the management capable of running this company? 5. Does the company have a lot of debt? I personally lose a substantial amount because of this mistake, and I hope no one repeats this mistake. This is why I am sharing with you the story. There are 2 companies competing with each other in the market for dominating the printing press industry. These 2 competing companies own a large portion of the overall market to the point the government has to step and stop them from merging. One company is selling at that time I thought was below value compared to their rival. Both of these companies have the same debt load and earnings were very much similar to one another, but the debt load was very high. Of course, trying to be smart over my brain capacity. So I picked the underdog with the same debt load, which was trading on the market what I thought was very cheap versus what their competitor was trading at the time. Both of these companies have a ratio of debt to equity at 4. Even after learning that a good ratio of debt to equity is 0.5 or below, I still bought it in. Now, due to the black swan of COVID-19, this company declared bankruptcy and now is in the process of liquidating its assets. Because their debt ratio is way above their equity, it is very doubtful that I will get anything back. So please don't invest in any company with a high debt load like I did. I hope my bad mistake helps others to avoid companies with lots of debt. To further extend my stupidity, the printing commercial business is a dying industry in the first place because of digital marketing. I don't know what I was thinking at the time, perhaps I wasn't thinking at all. So please remember, a dying industry mixed with a high debt level is not a place any investors want their money to be at work. It is like going to hell and keep going. 6. Price to sale ratio. Does it make sense to buy this company at the current price to sale ratio? A fantastic price to sale ratio is 3 or below. Secret number 3. Generating stock ideas. What to buy and how to find them. Did you know that most of the good companies to invest in are all around us? Like literally? Please note, we are not recommending you to buy everything you see around you, but some of the greatest investment is literally all around us. For example, Mr. Peter Lynch and Taco Bell. We don't know the exact profit he made from this investment, but we know it was a handsome return for him to speak about it. During his business trip, he sampled one of the Taco Bell tacos and found it very attractive. After digging into the company record and extensive research, he decided to pull the trigger, and it serves him well. Did you know at the age of 7 Mr. Warren Buffett went out and collected bottle caps for a week? After collecting the bottle cap, 8,000 units of them to be exact, he sorts them all out to find which brand sold the most. He discovered that Coca-Cola overwhelmed other soft drinks. So he went to his grandfather's grocery and bought 6 bottles for 25 cents and sell it to the street for more than what he paid. Perhaps this is why he invested in Coca-Cola later on in his investment career. The point is, everyday investors like us have an edge in finding a good stock to invest in as well. And the news or random people on the bus is not where to look. In this book, Mary, she suggests that can look into our credit card statements and see where our money is flowing to. That could be a great start to finding a great pick for stock investment. So the next time when you get your monthly credit card statement, check where and what you spend the most money on. Hopefully, you can find a great pick from there. But remember, overpaying on any good stock will not make you money. Therefore, knowing the intrinsic value of a stock is extremely crucial. Secret number 4. Does that company have a moat around it? For those who don't know what is a moat, just picture a castle with water surrounding it, and the only way to invade the castle, you will have to cross this body of water. Now, imagine this body of water is full of crocodiles and all types of traps around it. This is what we called a moat. The more dragons, more crocodiles, and the more traps around the castle, the better the moat is. From a business point of view. 1. Does this company has strong branding backing them up? For example, Nike is a strong brand. 2. Does this company have any economy of scale? For example, the economy of scale would be like Walmart competing in terms of better prices than their competition. 3. Does this company have a barrier to entry, such as patents protecting others from copying their product? 4. Does this company trap their customers in by having a high switching cost? Switching cost is very effective to retain customers from leaving you to go somewhere else. These are the moats that we should consider when we want to invest in a particular company. So before you invest in any company, please try to find a moat around the company. Secret number 5. Do you understand the business language? Here are some important numbers that we should be looking at. 1. Is the equity aka net worth growing year over year? 2. Is the company profit increasing or decreasing year over year? As we mentioned above, the company's ability to generate money is very important. Cash, though, is to a business as oxygen is to an individual, never thought about when it is present, the only thing in mind when it is absent. Warren Buffett. 3. Is their debt increasing or decreasing? 4. What is their net profit? Overall, the key takeaway is to invest in a company with a consistent financial record. Without a consistent record, is very hard for any investor to forecast this company from a long-term perspective. Secret number 6. The valuation of this company. Are you paying too much for this company? What is the intrinsic value of the company? A quick way to estimate the intrinsic value of a company in Mary's book is to use Graham's net calculation. Taking current assets minus total liability will give you the NCAV. We take the NCAV number divided by the share outstanding of this company, and we should have a rough estimate of the company's intrinsic value. Remember to have a margin of safety of at least 25 to 30% below the intrinsic value, just in case if our research is wrong. Secret number 7. Portfolio management. Any investors can choose to diversify or undiversify. Charlie Munger pointed out that any fool can diversify. However, if you choose to diversify, here are some tips from Mary Buffett regarding portfolio management. Tip number 1. Never put more than 10% in one stock if you choose to diversify. Tip number 2. When any one of your stock fell below 20%, check the fundamentals. Either buy more of the stock if the fundamentals still make sense. If not, then sell the stock and lick your wound. Tip number 3. Do not sell purely because of price movement. Tip number 4. Review our portfolio once a year. Do you have other investing secrets? Which one of these 7 secrets did you find to be the most helpful?
Thank you so much for making it this far. Please join our newsletters. We promise no spam, only to update you when new summaries are available. We swear by the moon and the stars in the sky. We hope to see you in the next summary. Thank you so much again, you are awesome.